Howdy, everybody. Welcome to Liberty Call. Today is Friday, November 3rd, 2023. Hope everybody's had a fantastical day out there. Pretty good day here in Colorado. Lots of sun, warmed back up. Most of the snow has melted. Apologize for being a little bit late. I had to go run some errands in town and grab some dinner. Hey, it's nice to not have to cook once in a while. So anyways, if it is your first time watching Liberty Call, I am glad you are here. If you could do me a favor, if you could give me some thumbs up, likes, shares, subscribes, follows, press the notification bell because you want to know when to go live. All right, well, let's go ahead and get into the numbers for today. Dow Jones was up 0.66%, 222 points, closed at 34,061. The S&P 500 was up 0.94, closed at 4358. NASDAQ up 1.38%, closed at 13,478. The VIX was down 4.79% today. It's down to 1491. Canada was up 1.01, Brazil was up 2.7, and Mexico was up 2.97. In Europe, Germany was up 0.3, the UK was down 0.39, France down 0.16. The Netherlands flat, up 0.04, Spain up 0.36, Italy up 0.69, Switzerland down 0.12, and Portugal up 0.05. Russian exchanges both in the green, the MOEX up 0.36, the RTSI up 1.29. And the Asian markets, let's see here. Japan was closed, and starting out with Australia, up 1.14. New Zealand up 0.57. The China and Shanghai was up 0.71. The Shenzhen component up 1.22. China A50 up 0.7. DJ Shanghai up 0.86. Hang Seng up 2.6. And the Taiwan weighted was up 0.68. So looks like, again, the markets are in a happier mood. Let's go to the weekly chart and see how they finished off. We had finished last week, was I think the third straight week of finishing the week in the red. So looks like this week's going to finish off in the green. Oh, wait, is this the weekly? Oh, there we go, the weekly. All right, so for the week, it looks like we're going to finish the S&P 500. We'll finish the week off up, let's see here, about 5.28%. Wow. Dow Jones, finish the week up 4.59. The NASDAQ, 5.77. The Dow Utilities, 5.21, and the Dow Transports looks like about 6.3%. So looks like, somewhere between 4.5% and 6.5% is where everything is lining up right now. So let's go ahead and take a look at the bigger trend and see where we are right now. So we've been in this downtrend for the last, August, September, and October, and really have jumped in the last 2-3 days since the Fed meeting. So I don't know. I mean, is this going to be the bottom? I personally, wouldn't count on it. But hey, it's tough to say what the future says. So, and same thing here on the S&P 500 chart. The last 3 days, boom, boom, boom. Just really, really up. So a little bit surprising there. All right, so that's the charts. Let's go ahead and get to the economic data that came out this week. Starting out with initial jobless claims, they came in at 217,000. Forecast was 210. Last week's number was 212. Continuing claims came in at 1.818 million. Forecast was 1.8, so 18,000 over forecast. Last week's number was 1.783. The ADP Nonfarm employment change grew by 113,000. The forecast was 150. Last month's number was 89,000. The ISM manufacturing index came in at a 46.7. Forecast was 49. So the thing to keep in mind here on a lot of these indexes is that anything below 50 is contraction. Anything above 50 is considered growth. All right. The JOLTs Job Openings and Labor Turnover Survey came in at 9.553 million. Forecast was 9.25 million. So about 200,000 over forecast there. About 300,000. Last month's number was 9.497. So it did grow a little bit. Factory orders month over month grew by 2.8%. Forecast was 2.4. And the unemployment rate is coming in at 3.9. The forecast was 3.8. Last month's number was a 3.8. And the participation rate dropped by 0.1 to 62.7. We were at 62.8 last month. And yep, I think that's... Oh, we got one more. The U.S. Services Purchasing Managers Index came in at a 50.6, and the forecast was 50.9, so just under forecast, and the previous was 50.1. All right, so I got those all out of order. All righty, well, let's get to the market recap. Dow in biggest weekly gain of 2023 as monthly job gains slow down. All right. Dow Jones Industrial Average had its strongest weekly performance of the year, rising 5.1% in response to a weaker than expected October jobs report. The U.S. economy added 150,000 jobs below the expected 180,000, and the unemployment rate inched up to 3.8. From 3.8 to 3. These numbers are all off by one, so it's just weird. Average hourly earnings increased by 0.2, falling short of expectations. This underwhelming employment data, combined with the dovish tone from the Federal Reserve Chair Jerome Powell, has raised optimism that the Fed would not raise interest rates again this year, leading to a significant drop in Treasury yields, and that's probably why the stock market's been going up. The report suggests that the Fed's rate hikes for the current economic cycle may already be over. Some experts argue that it is unlikely that the Fed will proceed with another rate hike in December. The yield on the 2-year Treasury note fell by 14 basis points to 4.837%, while the 10-year Treasury yield dropped 11 basis points to 4.559%. Apple, despite a weaker than expected sales forecast for the holiday season, managed to recover most of its losses and ended the day down only 0.5%. Other companies, such as Restaurant Brand and parent of Burger King and Tim Hortons, reported beating profit expectations but missing on revenue, causing their shares to decline. Meanwhile, Cinemark, a movie theater operation, exceeded Wall Street expectations, but its shares fell by 2%. In the energy sector, oil prices saw their second consecutive weekly loss this week. This drop was attributed to reduced concerns about supply disruptions in the Middle East and the uncertain demand prospects, particularly due to recent data from China. Energy stocks fell by 1%, and with declines seen in companies like Marathon Petroleum, Marathon Oil Corporation, and ConocoPhillips. All right, so markets seem to be in a better mood. I mean, oil's down, but I mean, it's kind of a give and take. Do we want oil prices to go down because then that makes our energy cheaper? But, if you're invested in commodities like oil and gas and things like that, because you think the equity markets are going to go the other way. So it's kind of like you want, if you're invested in oil, you want oil to go up, but you also want oil to go down so that you don't spend so much at the pump. Anyways. All right. Last up, I got an article here from Mises Wire. It's titled Blaming the Free Market Even Where It Doesn't Exist, written by David Gordon. All right. In this article, it critiques Angus Deaton's view on the American healthcare system and his criticism of the free market. Deaton, a Nobel laureate, argues that the U.S. healthcare system combines the worst of private and public systems, leading to high costs. He points out, well, I'll agree with that. The public-private, intermingled thing is not working. He points out that the main issue is with health insurance, suggesting that the free market cannot provide adequate coverage because it leads to adverse selection where only older and less healthy individuals buy insurance, driving up the premiums. However, the author challenges Deaton's assumptions. He questions why a free market healthcare system would necessarily lead to high insurance costs. Deaton's argument assumes that the current heavily regulated system is a proxy for the free market. It's not. The author suggests that if the medical costs were lower, insurance premiums would also be lower, making it attractive for young and healthy to purchase policies. Alternatively, if medical costs significantly decreased, they may not need insurance at all. They could probably pay out of pocket. The author acknowledges that these scenarios are speculative, but asserts that Deaton's argument fails to consider that a free market healthcare system would likely differ significantly from the current one. Instead of assuming that free market conditions would resemble the current one, the author contends that the burden of helping individuals with unaffordable medical bills would fall on private charity in a libertarian society. He also distinguishes this perspective from the social Darwinist view and emphasizes the importance of moral duties to assist the less fortunate without resorting to force the government to enforce these duties. All right. So where there's more freedom, things are usually cheaper. I mean, look at cell phones and big screen TVs. I mean, I think the first couple of big screen TVs we had were probably in like the $2,000 to $5,000 range. Today, you can get like a 70-inch TV or greater for $700. I mean, granted, it may not have all the smart features, but you can get little plug-in dongles that'll do all that stuff. So, I mean, that's normally what I do. I buy the biggest TV at the cheapest price because I'd rather, I don't need all the fancy features. I have all that stuff already. So anyways, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you guys have a wonderful weekend, and I'll talk to you guys next time. Adios.